Good evening, everyone. It's wonderful to be here. I want to thank Ravi and Ram and the Bangalore International Center for to be here. I've always maintained that in order to be certified as a legitimate public intellectual in India, you have to be anointed by the Bangalore Troika, which is Ram, Nandan, and Manish. Manish is not here, so in absentia, I will assume that he's giving his imprimatur to this talk. It's true that this is a fresh piece of work that I want to present to all of you. I think that we are actually in some pretty, I think, serious and challenging times in the economy. And, and to be completely honest with you, I used to work for the government. I used to monitor these things very closely. But I myself have been trying to find my way through this to understand what's been going on. And so this distance that I have, both physically and temporarily from India, has kind of allowed me to do this. But I shouldn't say I, because it's a joint work, completely joint work with Josh Feldman, who is my chief economic advisor and probably knows the Indian economy as well as anyone I know. So the title is called India's Great Slowdown, and I'm going to explain why we think that is the case. And then, a kind of story about why it happened. Few remedies. So let me begin by giving you the background and kind of introducing the Great Slowdown. So this is key macroeconomic indicators. Now, normally anyone doing this presentation would have started with the GDP figures and shown you how it's been going, the way that, someone said, 8, kind of 7, 6, 5, 4, 3, etc. But I understand the GDP numbers less and less these days. I look at more the underlying indicators and so try and make sense genuinely of the underlying indicators to understand what the economy is doing. And what I find is something actually quite unusual, which is that if you look at the, we think of 3, 4 major engines of growth from a macro side, consumption, investment, trade, and government. And what you see for the most recent period is that all these numbers are either in negative growth territory, capital goods is minus 10%, non-oil imports is minus 5 or 6%, or things are in barely positive territory. So, this is quite kind of tells you something that's something serious is going on. Now, so just to frame this, to kind of benchmark this, I kind of asked myself, or we asked ourselves, does this today resemble the NDA1 slowdown? Those of you who have longer memories than I do, there was a serious slowdown between 2000 and 2002 over a 3-year period, the first NDA government. And then I just want to look at these reliable indicators and what they look like, because this number is pretty much what we're claiming today it is. So I've just left that blank. It seems like, it doesn't resemble that NDA1 slowdown at all. All the indicators are kind of negative here, and in that period, they were positive. So I don't think this seems like that. Then I said, well, let's go back and look at, another period of where there was an extreme slowdown, which was the 1991 episode. Their GDP was only 1.1%, and you see that it basically, all the reliable indicators seem to match. Now, one big difference, of course, 1991, we had a macroeconomic crisis where we had, no foreign exchange, rupee tanked, went to the IMF. So this is, in that qualitative sense, completely different. We are nowhere close to a macro crisis in the conventional sense. But if you look at the real economy and the real indicators, we are, seem to be in that kind of territory. So if you compare it today with those two episodes, this seems closer to this. And then, of course, I look at this chart and look at electricity generation growth. This is like just falling off the bottom here, and it's kind of never been like this ever. So this is the sense in which I would say this is not just any slowdown. This is the great slowdown that India is experiencing. And we should look at this with the seriousness conveyed by these indicators and not by any sense conveyed by the GDP numbers. I mean, this is what is telling you where the economy really is at, and hence the great slowdown. Now, what is also, I think, quite, maybe it's because I just have a short memory, but this has been a very puzzling and frustrating, few months. It's puzzling because, India being argumentative India, everyone has a theory on what's going on. And so I want to capture a sense of the debate and tell you where kind of we come out on this debate. And the debate is genuinely confusing. Even I can't make full sense of what people are saying. It's also frustrating because, to be fair to the government, I mean, they have recognized what's going on, and they have taken action. The corporate tax cut, the public sector, PSU privatization announcement, and there is a sense in which there is concern, there is anxiety, there is even a response, but the frustration is that nothing seems to be changing on the ground, at least not so far. So one way of thinking about the debate is to kind of categorize people into two slots, as it were. They're the people who think of this in kind of structural, kind of long-term terms. Crudely, it's a kind of supply versus demand debate, structural versus short-term factors. And I think, there are two or three quite, important structural hypotheses. First, of course, is what, Raghu said at his O.P. Jindal lectures recently, that what we need to do is to do the usual panoply of land reform, labor reform, ease of doing business, the litany that people trot out when they talk about India, all of those. I actually don't think that that's strictly applicable in this situation, because while this can explain some of the long-run performance, it begs two questions. What suddenly changed? I mean, we haven't had land reforms and labor reforms for 20 years, and yet why did the economy suddenly collapse? One. Second, and this is actually a really interesting question, which I'm not going to cover fully here. I mean, we never had any of these land reforms or labor reforms, yet for 10 years, between 2002 and 2010, we boomed. The economy really boomed. So the notion that somehow the lack of reforms it can neither explain the current slowdown, nor can it explain the past boom, if this were so important. Why did it happen? A second interesting hypothesis is from, Ratin Roy and Andy Mukherjee, which also I think needs to be taken, is an interesting hypothesis. It essentially says, India has been growing because has been inequality. The rich have been getting all the money. They've been doing the consumption. Now they're sated. And so there's no more consumption, economy goes down the tube. I actually think I find it difficult to square this with the evidence, because I think people forget that in India, over the last, the boom years were always associated with exports and investment. The notion that consumption drives growth is a very peculiarly Indian notion, because in East Asia and all the fast-growing economies, it's exports and investment that are the drivers of growth. And of course, then income goes up and consumption goes up, and that follows. But consumption is never the driver of growth. Second, it's also the case that I don't think it's fair to say that Indian consumption has been mostly by, the rich or the upper middle class, because if you look at an index of FMCG, which is kind of middle and lower middle class consumption, it's been growing very well as well. So the notion that, because of inequality and sated consumption, things have collapsed, I think that doesn't, hold water either. Then, of course, there is more recently a kind of the series of what I would call explanations saying, their governance, this is, Dr. Manmohan Singh said it, Raghu said it, Kaushik Basu said it, that some combination of centralization, policy uncertainty, et cetera, are explaining, the current slowdown. I'm not going to get into this, maybe partly because, it's very difficult to kind of untangle how you would actually establish this hypothesis. And of course, the same questions come up. Why now? Why are these so important now? Then, of course, there are people who talk about, demand. Something is happening in the last few years. Cyclically, Harish Damodaran, the very thoughtful Indian Express economist, journalist, says, agriculture has been doing weak, and that's why agricultural demand is low. But of course, the problem is that agriculture started doing poorly from well before, as I'm going to show you. There are people, who say, monetary and fiscal policies have been too tight. I'm going to show you that actually fiscal policy has been actually quite loose, especially in the last few years. And then there's, of course, there's a whole kind of battalion of people, who are just dying to put everything on demonetization and GST. And I'm going to, show that, whatever effects they may have had initially in the first 6 months, that, these can't explain the current slowdown. And I'm going to show you a chart to try and illustrate that. And of course, the recent credit boom has been a hypothesis. And I'm actually going to, go through that to some extent, because I think there's something to it, but it's not just about what's happening in the last few months or quarters or years. So let me give you what our diagnosis is, and then try and, convince you that this is some merit, something to think about. I think the slowdown is severe because it's both structural and cyclical. There have been a number of long-term factors going back to the global financial crisis that started the slowdown. And then some, very specific factors have kicked in the last 2-3 years, so that, it's been structurally weak, and then, one more element comes in, and then all engines of demand sputter, and that's why we're in this slowdown. And what I think is kind of a little bit the novel explanation here is that both these structural and cyclical links have a common link, which is the financial system. I'm going to say that this is what runs through all of this, and what I first call the twin balance sheet challenge. That's kind of part of it. And now I'm going to argue that it's become a 4 balance sheet challenge, and that's why, it's going to be such a difficult task getting out of it. So it's a long-term decline. There are temporary factors. There's a credit boom which propped up growth. That bubble burst beginning, late September, August this year. That bubble burst. So initially, exports and investment collapsed. When the credit boom collapsed, consumption also collapsed. And so now every engine of growth has kind of basically stopped working. And I'm going to show you that the danger now we face is that this growth collapse itself creates its own very adverse dynamic, which is going to make getting out of it very difficult. Okay, so this is the hypothesis, and let me try and convince you that this has some merit, yeah? Okay, and so now all of you know that I wrote a paper on saying the GDP was, kind of mismeasured, and you don't have to read anything else. Go and read the critics by all means. But to me, it's all captured in just this one chart. So this shows all the, oh, you can't see this. These are all investment-related variables. This is, government-related variables. This is exports and imports, and this is measures of consumption. What you find is that in the period after the measurement change, which is also after the global financial crisis, every engine of growth collapsed by double digits. That is, to give you one example, exports of goods and non-factor services before grew by about 13% every year, almost in dollar terms, even more perhaps in dollar terms. 13% every year, it collapsed to about 4 to 5%. And this is true for every engine of growth, and yet somehow our number says, you know, all this can happen, but this is really what Arthur C. Clarke would say. This is a definition of a sufficiently advanced technology that resembles magic. And this is what I think, but I don't want to get into that GDP debate, but essentially to show that essentially after the crisis, everything collapsed, exports and investment. When I say collapse, I mean they go from 15% every year to 3-4% every year. So is it any surprise that the economy started slowing down? So this is the key structural slowdown that happened. And this is true of the software sector as well. I was just talking to Nandan. Software used to grow at about 30% a year. Now it's growing about 8 to 10% every year. Now, and this is, and of course, agriculture also did a little bit badly. It's not that agricultural output changed. It's just that the terms of trade, you know, agricultural prices started falling, and therefore the incomes of farmers started declining. Why did this slowdown happen? Exports came down because world demand came down. And I have some work ongoing, which is going to, I'm pretty convinced now that on the export side, we have actually not done that badly relative to the world. We've actually done quite well, even after the global financial crisis. So to blame, so exports came down, therefore growth comes down, yes, but exports didn't come down because we did something massively wrong. The world economy collapsed, our exports collapsed. That's why I don't want to focus on that engine of growth. I want to focus on the investment and financial angle. And essentially what this shows you, what we call the twin balance sheet. This is NPAs in the banking system. They rise very steadily. And this is the flip side of that. Actually, this is actually the flip side of corporate stress. This is fantastic work done by Ashish Gupta going back of Credit Suisse, going back almost 10 years. You know, they cataloged this house of debt. This essentially says that 45% of total corporate debt, this number, is with companies that can barely generate enough earnings to pay their interest. So the interest coverage ratio is less than 1. How much of the debt is with companies that? It's steadily been in the 40s, and now it's gone up. So this is why investment and credit have been very, very weak since the global financial crisis. And this is the big structural explanation, and it's related to the twin balance sheet. You know, firms are over-indebted, they cannot invest, investment collapses, banks are not doing well, they cannot provide credit, so the combination of the two, that engine is basically gone. Now, the question is that if that is the case, why did the economy grow, even fizz briefly? This is something I hadn't fully recognized. Essentially what happens is that after 2002, we have weak growth, and then suddenly the economy perks up after demonetization. In the 4 to 6 quarters from about June 2017, March 2017, is when the economy does best in recent years. I want to re-emphasize that for the, I don't want to get into a debate about demonetization and GST, we can have that over dinner, but, whatever effects it had, and it clearly had adverse impacts on the informal sector immediately, but there was a boom in 17, 18, and 18, 19. You can see this is the best the economy has done. And this is true. Again, don't look at the GDP indicators. Look at all these other indicators. You will see exactly this pattern. Credit, capacity utilization, you name it, all the big macro indicators, they actually grow even fizz briefly after 2017, after a year, 6 to 9 months after demonetization. So the question is, these long-term engines have collapsed, but Yet the economy doesn't do too badly, and in fact actually surges for a while. So you have to have boom is partly because of demonetization. The money came back into the banks and the mutual funds, and they lent the money. We'll get into whether it was right or wrong, but this was the boom. So there was a credit boom fueled in part by a number of things, including demonetization, the money that came back. And again, this has got messed up a little bit. In fact, in the last 2 years, although the headline government deficit number has come down, actually the government, because of off-balance sheet activities catalogued by our Controller and Auditor General, actually there's fiscal stimulus in the economy. The government is pumping money. So the people who say there was not enough demand from the government, actually, the facts don't bear it, because it's just that you have to look behind the headline numbers. I mean, which seems to be the case for almost anything that we see in India now. You have to look behind the headline numbers to understand what's going on. So this happens. The economy picks up because of this, and then the last collapse happens. So then you have to explain. So you have a long-term decline, you have the fizz, and then you have the collapse. So why did it collapse? Now, all kind of financial sector collapses need triggers and fundamentals. Something kind of out of the blue happens, unexplained, maybe even unrelated, and then, the thing goes down like a pack of cards. That's what happened with the Lehman global financial crisis. In India, the trigger was ILFS. August, September 2018, this behemoth, 90,000 crores, under the radar screen, unbeknownst to regulators, comes up and boom, collapses, 90,000. And what that does, apart from the fact that it's big and the ripple effects that itself generates, the financial community wakes up and says, hey, let's look at the rest of the system. Is there a lot of bad lending going on elsewhere as well? Let's reassess the risk we've taken. And lo and behold, they do find there is a thing, which is this bubble that I was talking about, especially from the NBFCs. It finances real estate to a great extent. Now, and I think this is my new understanding of the economy, that this bubble, real estate bubble, and I call this the non-bubble bubble for a reason, I'll explain why, is kind of India's version of the housing boom that happened in the global financial crisis in the United States, with the following commonality and difference. The difference is that, the commonality is that lending went up gangbusters to real estate, about 20% a year for the last 5 years. But prices didn't go up. That's the difference. There was no bubble in terms of prices. What happened instead was, there was basically unsold inventory was rising. The bets that the real estate companies took that the economy would be booming, middle class, the great India story, that didn't quite pan out. They couldn't really sell what they were building. So inventories start mounting, and that has to be financed. So the Indian non-bubble bubble doesn't happen via prices, it happens via quantities. Inventories are being financed, the build-up happens, but we know, whether I can't prove this to you, but when the ILFS reassessment happens, people say, wow, this is kind of like an unsustainable bubble, because at some stage, unless this inventory is sold, unless prices come down, you can't clear this system. But notice that not only did prices not go up very much, they haven't come down very much as well. And the reason is that if they start selling these properties, the value of the collateral that they've given to the banks itself comes down, and then you get into that terrible doom loop that we talk about. So in a sense, this real estate non-bubble bubble is the fundamentals that leads to the final collapse. So, and this again is kind of relates to we call this the twin balance 2, because twin balance sheet 1 was banks lending to infrastructure companies that went sour. The second one is NBFCs lending to real estate, which goes sour. So now we have 4 balance sheets that are compromised. On the financial side, the banks and the NBFCs. On the real side, I'm not going to go into telecom and other things, that's another story, but at least real estate and infra are thing. And so this is kind of the unifying explanation for the slowdown, the bubble, and the collapse. And now this is where we come to why this is such a dangerous situation. A lot of people have written on, when you think about the government or the private sector, you always say, look, I have to borrow to finance things. What's going to make me repay the money is a growing economy. So if GDP grows, the government can repay its debts more easily. If GDP grows, profits increase, and private sector can service its debts. So this plots nominal GDP growth, and if someone in the audience is smart enough to say, how come you don't believe in GDP, you put up these numbers? To that, my answer is, I have less of a problem with nominal GDP numbers, because in my view, it's the real GDP numbers that are more problematic. So nominal GDP collapses. This wedge, this pincer between interest rates and growth rates, when that starts widening, your debt cost becomes too great relative to the profits that you can generate. So this pincer starts rising, and this can itself create more complications for the system. We have to get out of this. And people have remarked about this for the public sector, but it's equally true for the private sector. So this is why you have all this happening, and the current situation itself creates its own very dangerous dynamic. So what should we do? Now I come to the do's and don'ts. So I have 15. Okay. The don'ts and the can'ts and the do's, I'll run through them somewhat quickly. And several people have thoughtfully written about this. I'm not going to go too much into this. Basically, I think now we're in a situation where monetary and fiscal policies are pretty much out of the picture here in terms of responding. Monetary policy, because even though lending rates have been coming down, the spread between the lending and the repo rate has gone up. Essentially, banks are being very, very risk averse about lending more. They're basically charging higher prices, even though the cost at which they're getting money has been coming down. They're not willing to pass it on. So Sajid Chinoy recently has a very nice piece. Even though the repo rate comes down, the lending rate doesn't come down as much because of this fear and kind of anxiety. And this is kind of like the premium. So cutting interest rates is not going to buy too much by way of mileage. Similarly, on fiscal policy, remember that if you look at the real numbers, it's possible that at the end of this year, with the economy so weak, again, I'm not at all sure of this, but if the headline number, according to the CAG, something like combines about 8 to 9%, we could well get back into double-digit deficits, and then with high interest rates relative to growth and these deficits, financing, spending more money becomes less and less attractive, less and less effective, and this just shows that this same wedge between the policy rate and the lending rate is also true. Banks are just less willing now to hold on to government paper that the government supplies because they don't want to hold this, they don't want to lend. And so we're in this situation where monetary and fiscal policy are somewhat ineffective. Now, this is something I'm going to say very strongly, that the fiscal situation is tricky. And I hear a lot of talk that, because people are saying, oh, consumption is suffering, the poor, whatever, we should have personal income tax cuts. After all, if you could give corporate income tax cuts, why not personal income tax cuts? I would say categorically that this would be a very bad idea. It would be a very bad idea for a number of reasons. One, consumption doesn't drive growth. We've seen that. Two, we don't probably have the fiscal space. But three, the most perhaps important, if the government is going to, spend more money, it's not at all obvious that we should be giving this to, taxpayers who are, if you look at the income spectrum in India, 80% of those who are poor don't pay taxes. So if you really believe that this should be given to those who will spend the most, then individual income tax cuts are not the way to go. And finally, of course, you want more and more people to pay income taxes, not less, from a long-run point of view. So I would be against it. Now, there's also talk at the next GST Council of raising GST rates. I think that would be really the wrong time. I think there is a strong case for simplifying the GST rate structure. I wrote a report on this. But this is not the time to raise taxes, because we know when an economy is in a recession, you don't want to aggravate it by tightening further. Taxes tighten, and you don't want to tighten. And look at the oddity of the current debate, that on the one hand, we want to boost consumption by reducing personal income tax, and on the other hand, we're also considering raising rates at the lower end of the people who pay, who are most likely to be, most consumption sensitive, as it were. So this combination to me seems to be, completely something that should not be considered in the current conjuncture. Now, we come to the financial sector, which is the heart of what's going on. I think we've made progress. I think the IBC was one of the major achievements of the government. I think it has done, it has allowed us to shift into a new paradigm where for 40, 50 years we couldn't get exit out of the system, and finally we got a reasonable mechanism for exit for bad loans being kind of resolved and so on. So NPAs have come down. Banks have become, because, by the way, the government has spent about 3.5 lakh crores over the last 5 to 6 years to recapitalize the banks, which is what has made them healthy. And, the IBC has resolved some of the big, large cases, although they're mostly in the steel sector. Now, but why is more action needed? NPAs are still extraordinarily high, by far the highest in the world, and this number is without factoring in the new bout of bad loans that are going to come in post-NBFC lending to the real estate sector. So these are rising, so the problem by no means has gone away. As you saw, corporate stress has reached a new peak. Remember that, if the economy is going to be slow, it is only, to be expected that the corporate sector is going to be under stress. And in a sense, this is a derivative of corporate stress. If, corporate stress goes up, this will also go up. And of course, we see that bank lending has stalled, and power and real estate are still major problems in the economy. And for all its, I don't think at all we should, denigrate or downplay how much the IBC has achieved, but I think I'm going to argue that it's still a work in progress and that we need to, improve this much more. So we once wrote in the survey that to address this problem, you have to work on 5 R's. Recently, I found someone appropriating it, and some senior government official appropriating the 4 R's and passing it off as their own. I had half a mind to file a case on intellectual property right violation, but I said I won't. But there are 5 R's on this: recognition, recapitalization, resolution, regulation, and reform. I won't go into all of that. Essentially, recognition, we have to come clean on what the problem is. Under Raghu, we had the first bout of transparency, which proved to be very useful. But there's clearly now, we really don't know how much bad stuff there is out there. So we absolutely need a new, what's called an asset quality review, an honest assessment of how bad these loans are and how big these bad loans are. And we have to do it not just for the NBFCs, which everyone is talking about, but the kind of boomerang impact back on banks. I think we need more, markets need more confidence that the problem is not too big, and that we need an independent assessment of that. So that's what we do. I think we need to make changes to the IBC to better align the incentives of bankers, promoters, and the judiciary. And in the paper, which I'm going to release at some point, we have kind of detailed, essentially that the incentives are not quite aligned, and I think we need to fix that. We have some actually concrete proposals in the paper. But I think another big thing I would say is, and this is kind of a new thought, is that we need to supplement the IBC process with something very specific for these two sectors, real estate and power. Now, when someone says, why real estate and power? Why not just handle it to the usual IBC? My answer is the following. And I've thought through this for power more, but I think it applies as much to real estate. You see, the power sector, firstly, the magnitude is big. It's about 2.5 lakh crores stressed debt in the power sector. And these are generally good assets. These are all new assets compared to, the irony we have is that older, thermally inefficient power plants are probably running at much higher plant load factors than newer thermal plants. So, and there are a whole bunch of issues about discoms. So what is different is that this is a sector where resolution depends upon other policy actions to be taken by the government, and coordination between different parts of government. So this is kind of eminently suitable to a government-led process where all these policy decisions have to be taken along with cleaning up the whatever bad assets they are. And a pure IBC process cannot do that because you don't have what should be the tariff policy, what should be, should the state governments stop utilizing inefficient plants. So there's a whole gamut of policy issues that has to be coordinated and led by the government. That's why we need something special for the real estate sector, for the power sector, and something similar is true for real estate because the Supreme Court has said, customers who've bought property will need to have special consideration, and I think that needs to be done via a political process of burden sharing, because it's clear that everyone has to bear the burden, but that's an acutely political process. It cannot be left to IBC judiciary because everything will be kicked up. There'll be lots of delays and so on. By the way, in the IBC, we also need to tighten schedules. I must say that for a period, all these things that I'm talking about, under Urjit Patel and Dr. Acharya, I think there was a period where I thought, we were actually getting to the root of cracking the problem in the financial sector, and I think we need to regain some of that same urgency and same action. I won't go into all of this. I think, I know that a very distinguished member of the board of the RBI is here. I just want to leave the thought with you that, all of us must and will continue bashing politicians and governments, we do that. But if you just step back and think about it, the series of completely unidentified problems that have hit us, it's been a catastrophic failure of regulation in India, absolutely catastrophic. Everyone bears responsibility, so I think we need some better way of doing this. I can reel off like 8 cases in the last thing, which I don't want to, where either these things, let alone being headed off, they were not even identified and they came out of the blue. I think we need to change that. Proposals on that. I think we have to stop recapitalizing the banks until we get some serious reform, and then we need to do other reforms as well. I'm not going to talk about, I think agriculture has to be fixed, but even as I make these recommendations, even writing it, I felt a certain absolute weariness because there's nothing novel about these proposals. They've been said ad nauseum, so we just need the political will to do it. But I think the only thing I would say here is that there's a kind of Arun Jaitley insight here, which is very important, that because agriculture is regulated both by the central government and the state governments, you cannot make progress on agriculture fundamentally until you have this cooperative federalism framework working like we have in the case of the GST. Otherwise, it'll just be the same things happening again and again. I wrote a piece yesterday. I think that before we begin anything, I think we need to do the financial sector, we need to do on agriculture, but I think it would help a lot both to restore confidence and just to be able to have better data for policy. We need to fix the data system in 3 areas. I would say the GDP, employment, consumption, all these numbers are being challenged. The fiscal numbers, the CAG himself said was challenged. I just spoke about the AQR, the financial system we need. So in a sense, if I were to, ask myself 5 questions, do we have a lot of room for stimulus or do we have no room for stimulus? I don't have the data with me that can help me reliably answer that question. Has stress in the financial system gone up, remained the same, or as officialdom is claiming, actually things are under control? I don't know the answer to that, and I don't think most people do know either. So I think that, and of course GDP, we don't know the real answer. Now, of course, now the consumption numbers have come up. So I do think that we need to, on a priority basis, start with fixing data systems, which can have a lot of very beneficial impact. So let me conclude, and I want to conclude a little bit stepping back here. I think the economy is in really serious, faces serious challenges of a kind we haven't seen certainly since 1991. This is the great slowdown due to a combination of structural and cyclical short-term factors. There are no quick solutions. the financial sector can't be easily fixed. IBC, bad bank, everything will take difficult. All I will say is that the urgency is greater now, but critically compared to 2014, 2015, the government also has more political capital. So in that sense, both the need is greater and the capital is also greater. So I'm hoping that, we can start addressing these problems. And of course, there is a much deeper problem about the Indian state. I've spoken about stigmatized capitalism a lot. I think Manish has a very nice line about the private sector's legitimacy deficit and the public sector's execution deficit. I think they're all kind of suffer from some problems of delegitimization for a variety of reasons. So, just to give two, if I cannot tell you when I think about how are we going to do private investment in infrastructure. We used to do it in the public sector. We thought we'd found this PPP model. That kind of was a mixed bag, and we're still kind of picking up the pieces from that. How will we get private investment in infrastructure? You have, the famous 4C problem, which stymies both private initiative and public officials, and some people are saying now that that's been added on to with other forms of, regulatory and other kinds of policy uncertainty, harassment, whatever. So I think it's a much bigger problem in terms of how we get private initiative, private investment, especially in infrastructure. So I think sustained effort is needed, and all of you, you should think of me. I can guarantee you that within the next 2-3 quarters, there will be some recovery. It's the nature of this economic engine beast that there are cycles. But it's when that recovery comes is when we must guard against complacency, because there's a lot of hard work to do. And whatever these green shoots that may come, they are sirens that must be resisted. I also think that we need realistic objectives. I think the world is a very different place today from 4, 5, 10 years ago. Now, people speak about the middle income trap. India is not quite an upper middle income country to kind of start thinking about middle income traps. What I think is true is that countries like India, which are lower middle income, poorer than the East Asians and so on, they do face some external headwinds. The world is not as favorable to absorbing our exports as it used to be 10 years ago, or our software exports, our goods exports, our people. So the trading environment is much more sober than it was. Climate change is happening, which is going to affect our agriculture, and technology could be a mixed boom for Indian employment. It's a kind of an open question. So there are these headwinds, but so I think we should not expect as a matter of birthright that India will grow at 8-10% just because we're India or whatever. Those days are gone. We have to moderate our expectations. Having said that, I want to end on a note of, I don't like these metaphors of traps because they kind of take agency away from us. Is this trap something happening? It's kind of, we are destined to fall into this trap. No, we got into some of this because of what we did. Surely we can get out of it, or some of it, because of what we can do in the future. So I think, there is this balance between a moderation of expectations, a realism based on the fact that the economy is world is very different. Our challenges are quite serious, but without this, fatalism and determinism that we're in traps, it's all over, etc., etc. We have agency. I think this is not. I just want to end on a joke, but there's a famous line that says, Will Rogers, if stupidity got us into this mess, why can't it get us out? To the extent that we did this to ourselves, I'm sure we can, come out of it as well. Thank you very much.
Just give us a minute as we set up.
Thank you, Arvind, for that very detailed and, need I say, insightful discussion of where we came from, where we are, and where we might choose to go. Just a moment of preamble. When Ravi asked me to moderate this session, I said I was going to be on a flight from the US this morning and I would still be in jet lag. And he said, you'll be perfectly qualified since we are talking about a zombie economy and a yet to be revealed topic. So that's why I got chosen for the task. Since you mentioned the government representative on the RBI and also a member of the Troika, maybe I can ask a question on his behalf, which is, did you speak truth to power when you were there? And for instance, the Will Rogers quote that you gave at the end, did you use it in the corridors of power? And how did they respond? And I'm going to go on to ask a question about whether the real problem is actually the governance problem, but not in the way that it's being talked about.
Yeah, I mean, all of us are waiting to write our memoirs at some point where we will. I think, the fact is that many of these issues, we were raised and debated. For example, this whole twin balance sheet, we had this raging debate where, there were one or two of us arguing for a bad bank then, and there were lots of people who were against it. And the government, because of the kind of political sensitivities then associated with, because in a bad bank kind of approach, the executive and government have to take responsibility for all these haircuts, et cetera, and in this kind of suit boot sarkar kind of mahal, those things become more difficult. And that's why I think the judicial approach was chosen, the IBC, and I think I respect, I don't want to second guess, but we had this raging debate on that, on the GDP also, we had raging debates inside. I wrote about this in my first economic survey. So I don't think that, at least when I was in government, at least with my boss, we used to have fairly heated discussions on almost everything. Yeah.
I can make a morbid joke and say that has survivor bias, but let me move on to the next sort of idea around this, which is, you spoke about data, you spoke about a lot of structural tightening that has taken place, a lot to be done. But was this all done in a completely non-cogent, somewhat ad hoc sort of way, in such a manner that we actually got the tightening before we got any sense of the impact of the reform? So, for instance, IBC, for instance, all of the good actions taken by the RBI, there were some not so good actions taken by the RBI, but all the good actions taken by the RBI in not evergreening and so on. Is it that we tightened, perhaps from one, lack of cogency, and two, some sort of a socio-economic DNA rather than an economic DNA? Would you?
See, I think both these questions, I think, have, the common answer I have is that, the notion that governance takes place in this ideal world of completely being coordinated, planned, all consequences foreseen and action taken, etc. I mean, that's a fantasy world. I mean, the world of governance is, you try and think through these things, you try a few things, you don't do a few things because there are political constraints. So I think the question that I asked myself is not, is that it's kind of like the Robert Rubin thing. Knowing what you knew then and knowing the constraints then, could we have done better? This, kind of Monday morning quarterbacking, is kind of interesting to do, but because, governance is a very messy business. So it's not going to be all coordinated. I thought, for example, the IBC, I think, you had a process where, there was a lot of evergreening for a long time, for whatever reasons, you should talk to others on that. Then we had, the AQR. then there was a sense that the problem was pretty acute. And then there was a debate on what to do, whether bad bank or IBC. And we got it. And now I think with the IBC, we're seeing that, it's working, but it's also not working, so we need to take action. So governance systems are about, difficult actions under constraints, and do we have mechanisms for, reappraisal, recalibration, and so on.
Do we?
I think, the example I know better, so on the IBC, certainly there's been a lot of action to change the laws and so on. The question is whether they're working or not, that's another question. Similarly in the GST, which I'm more familiar with, obviously the initial design was not what we wanted, but I think there were, lots of, at least some corrective action taken along the course. Now, whether it's gone far enough and well enough, I think that we should debate.
So, Arvind, I'm not going to let you go on this, and I'm going to call this Saturday evening quarterbacking, not Monday evening. For those of you who are not familiar with the reference, we're talking about the Sunday game here, so either before or after. And the question I have, and we have 4 years left on this administration, so I think it's definitely Saturday, if not Friday. So the question is it that lack of, it's not that there are two extremes, right? You're saying there's a completely practical sort of tweak it as you go along approach on one side, and a theoretical technocratic alternative. But those are not the two alternatives. There are many alternatives in the middle, which is you have a cogent framework and then you tweak as you go along, right? Is that absent?
We need a metric for assessing whether it's absent or not. I think the fact that things have turned the way they have, I think you could make the case that in some instances there wasn't a cogent framework. In some instances there were, and I think to the extent there wasn't, I think we are facing some consequences for that. And in some cases where things are working, maybe it worked out okay. So I think it is a kind of mixed bag really on this. And I'm not sure we can say, whether across the board there are no cogent frameworks or not. Certainly in some parts, I think there were cogent frameworks, and I think in some parts clearly there weren't.
So for instance, does this government know whether it wants to be statist or in favor of the private sector playing a greater role?
See, I think that, okay, so let me come to this whole cogent framework thing, right? And this is a thing that, it's a debate I had with Raghu as well, this lack of vision thing. I could make a case that, what I call the public provision of essential private goods and services using this JAM technology. And, you could talk about, toilets, bank accounts, et cetera, et cetera, et cetera. There was actually a fairly cogent framework around that, right? And this is a framework that the Prime Minister was very keen on because we wanted to deliver all these things. And there was a lot of actually, I could see at least post facto, there's a lot of kind of method and thing that, I'll tell you what kind of the vision in that could be. I'm just inferring this, but I think one can detect a vision, which is one that, say, you have a basic needs agenda, right? A social welfare planner has a basic needs agenda. And he says, what are all the basic needs? And then you roll out all the things that we say, but you say, what about health and education, right? Then, the framework says, or at least the thinking goes, health and education, very difficult to do, takes much longer, and it's because they're also done by state governments, maybe there's a kind of appropriation attenuation that happens. That is, that people who do it don't get the credit for what they're doing. Whereas when you supply essential private goods and services, whether it's toilets, cooking gas, bank accounts, there's a kind of attribution that happens, and there's some recent research which kind of validates that. So the framework says, I know health and education are important, I can't do it, but I can try and do all these other things which are also important, and I will pursue that vision. And that's why we have this kind of socialist, what I call this the new welfarist agenda. And I think there is a vision and a framework behind that. Now, so that's clear.
Welfarist agendas need incomes. Both national incomes and household incomes.
And this is where the debate I had with Raghu, that So now the question, so now you're, when you start off on this, you think you have the resources and you embark upon it, right? Then if you realize, again, you don't have the resources, which you're absolutely right is happening now, the question is whether there can be a mid-course correction or not. So I think that's what we have to assess this, that there was a vision there, it is running up against resource constraints, absolutely. Because remember, some of it was actually being met by, by increasing the deficits and increasing spending, so on. So, resources were found somewhere or the other, but you can't do this indefinitely, and so you have to find new ways of doing it. So I think in that sense, but on the broader public-private, I think, balance, I think it's an open question. It's an open question whether, we know. See, the problem, and I'm not trying to at all make excuses for anyone, when I think about stigmatized capitalism, when I think private sector has a legitimacy problem, the public sector has both an execution and a legitimacy problem because of all the spate of things. The only way you gain that legitimacy is by delivering things and doing things. So ultimately, I think if the government can deliver growth and it can deliver its social agenda, it will. Otherwise, it won't gain legitimacy.
Yeah, so I'm actually not arguing in favor of one or the other. I was just saying, for instance, the latest budget presented after the new government came in power.
After I left.
After you left, much after you left. Basically switched back to private sector being the new messiah all over again. I mean, if you read that budget speech, I didn't count it, but I would almost bet that the word private sector appeared more than practically any other word there.
See, I think...
So, I mean, it's the lack of cogency that I'm speaking about, right? Which is you switch between multiple ideas. Anyway, let me move on.
No, but there, I think, as a general rule, I think we should judge governments by what they do, not by what they, necessarily what they say, especially
revealed preference.
Yeah,
okay.
yeah, exactly, what
right.
they do. And there's a lot to be, to hold them accountable for.
Okay, on revealed preference, let's switch to data. And I think anybody who's any type of study or scholar, student in this mix will agree that the government has messed with data severely.
I mean, you're preaching to the
yeah.
choir.
So
yeah.
The entire room is the choir,
yeah.
right? But why isn't God listening?
No, I think that's a absolutely fair question, and that's why I think that we need to do this at many levels. It's not just just GDP and stuff. The fiscal accounts, and remember here. It's not even, in the case of the fiscal things, it's their own CAG who's been saying this as well, right? And, the outgoing secretary also has given views. So the question of why it's being done, I just wish it will be done. I can't give you a very good answer.
I can just add, since you mentioned that CAG has mentioned it in this regard, that as India goes from the Hindu rate of growth to the Hindutva rate of growth, our pantheon has shrunk to 2 gods.
Yeah, I think there are more learned people than me.
Yes, okay, I will leave it at that. Let's move on to the economy itself. If I were to sort of synopsize, and please tell me if I'm synopsizing correctly, your entire conversation, the difference between even severe crisis of the past and the one of today is that we have a different sort of balance sheet crisis. In 91, 92, we had a balance sheet crisis at the macroeconomic level. Today, we have it at the bank, NBFC, and other levels. I don't fully get the real estate discussion because prices are the best way to discover a crisis, and that hasn't happened yet. But we'll come to real estate in a second. Am I correct that you're characterizing this as a P&L crisis in the midst of a balance, sort of at the same time as a balance sheet crisis as represented by the financial sector?
No, I think there is a difference between macro and micro crises. They're not just balance sheet crises. In one very important respect. And that's why I think people are having difficulty understanding the current slowdown. When you have macro crises of conventional sorts, you have actually very large and disruptive movements in a number of prices, exchange rates, interest rates, defaults. So you have actually major disruptive things, discontinuities. That's what happens in a macro crisis. The problem here has been it's more like a slow bleed over a very long time. So you've not got any disruptive change. You've not got inflation going up. You haven't got exchange rates going down. You haven't got GSEC rates going up. What you've had is steady decline in long-run growth, which has affected balance sheets, and then a further bout now, which has really taken. So it's still not a macro crisis.
No, but I have to disagree with you there. Even in a micro crisis, assuming it's in a sector, whichever sector you take, when the market recognizes there is a crisis, even if it is the slow-boiling frog syndrome, when the market reacts, the only way it knows how to react is through prices. So if there is a real crisis in real estate in the way you're speaking about, a credit bubble, build-up of inventory, but no correction in prices, what does that mean?
See, I think that, look, the fact that the economy is as weak as it is, right, means that incomes and livelihoods are being affected. It's a very, and it's a question, let me confess, I don't have an answer to in a macro sense. It's about the economy is, if all this is happening, how come stock market prices are doing so well? So, I mean, all these...
Okay, not well.
Compared to the, compared to these indicators, there's a huge disjunction, right?
Yes.
So, I don't want to, while I love markets and things, I won't always, infer back from the way the markets are behaving as to what's happening in the real economy. In this case, because there's just too much of a wedge. So I think the question is, we're having this kind of, real sector crisis, macro, growth is slow, which probably means, employment, consumption, wages. So it's affecting everyone, but probably not, it's affecting everyone a little bit. And that's why you don't get these huge disruptions, and that's why maybe markets also don't react. But it's no less severe because of that, and that's why we need all this action.
You mentioned, for instance, the spread between repos and the lending rate. It's just another way of saying the credit spreads have increased, am I correct?
Yeah,
right?
Something like that, yeah.
So usually when credit spreads increase, it really means that there is risk aversion in the economy.
Correct.
But is it all the same syndrome? It's you talking about it, we listening about it, the newspapers writing about it. Is just a risk aversion that is permeating this, or is that a real crisis?
See, the risk aversion is a manifestation of something deeper. What is deeper is that...
But the question is it an excessive manifestation of something that's there, but the aversion is greater? But for instance, post-ILFS, there's no longer a liquidity crisis. There is a lending crisis, right?
Yeah, correct.
But there's no liquidity crisis.
That's because the RBI is pumping money quite a bit.
There's plenty of money in the system.
Yeah.
It's just not getting out to the people who need it. So that typically reflects not that liquidity. Whereas in 2008 in India, in November 2008, in the US in October of 2008, we had both a liquidity and a risk aversion. You had a massive crisis going into those months.
But we came out very quickly because we didn't have this, we didn't have compromised balance sheets for so
Here.
long.
There you had it.
Yeah.
No, there you had it. That's why you had TARP and so on.
No, I'm talking about in India in 2008. Or you're talking about the US 2008?
Yeah.
Oh, fine. Yeah. But see, I think, look, here's, let me say why we're also having this slightly confused discussion. I take responsibility for it. Is that this confusion and this spate of explanations reflects the fact that this is absolutely new territory for India. We have not had anything like this in the past because we've only had, what Harish Damodaran calls the 3 Fs, food, fisc, and foreign exchange were the problem. Somehow we sorted it out. This unrecognized slow bleed for a long time, which has completely compromised the financial system and is compromised large parts of the corporate sector in this kind of pervasive and long-run way, is something we've never had in India, and that's why we're having difficulty even, identifying the beast, let alone how to respond to it.
So my last 2 questions, please think up of yours in the meantime. So if the economy somewhat simplistically is defined as C plus I plus G plus net exports, what's the ism that says you can't lead with C?
4 things. One, One is that if you look at all the East Asian experience and all the episodes of high growth, not just in East Asia, but in India as well, I don't know whether you saw the charts. I mean, I think people haven't recognized that in the 90s and the 2000s, when we boomed, our investment boomed and our exports boomed and our trade boomed. And there, it was not consumption that led growth, because in no country in the world can you get sustained 7% growth based on consumption, because consumption requires income or at some level savings. So we've got the causation completely flipped in India, and endemically so. Consumption doesn't drive growth in the long run. Exports and investment does. And that's why, if you want to boost people's consumption because you want them to boost consumption, go ahead and do that. The reason is very simple, is that to boost consumption, you only have your own market. And that's what the import substitution did. If you want the world market where there's no constraint on demand, that's why you export and you invest to export. And this is what is frustrating about India, that people think that you can get 7% growth on a sustained basis based on consumption. You just cannot.
But could you separate the problem? The 7, 8% even is the long-term growth rate.
Yeah.
Going back to your metaphor of the ICU, why deny the economy the ventilator in ICU?
No, because there are other things you can do. Supposing you say,
But I didn't see there was no cyclical solution in your 5 hours.
Yeah, because I think
Because they're all further tightenings, actually.
No. So
They may work in the long run, but they may take you down to...
I mean, how much are we going to postpone the problem because of every time doing stimulus?
No, we did corporate reform, we did IBC, we did... So we have done a few.
But
GST, hodgepodge as it is, we did.
But we need to do, clearly we need to do much more to get the financial system is jammed.
Yeah.
The financial system is jammed.
No question.
And if the financial system doesn't recover, you can do whatever palliative you want. It'll work for 2-3 quarters, but that's it. But finally, I would say that even if you wanted to do some, consumption type thing, then you have to step back and say, what is bang for buck and value for money on this? Personal income tax cuts ain't it.
So last question, I'm going to turn it over to the audience for the rest of the time. Why is IDBI not privatized? It's the easiest one to privatize. It's the easiest one to answer the critics who say there's no governance reform taking place in the banking system. When you were there, you couldn't help do it. They can't do it now. If we can't do those kind of things, it appears to be a political will problem rather than either technocracy or some...
Yeah, absolutely. I think when the big things don't get done, it's entirely a political will problem. There's no getting away from that. Absolutely.
On that note, questions from the audience, please. And we'll just move the mics around. I'm going to take right there at the back, just behind you. Wow. Okay. He who has the mic has this. All right. So this one, then 2 back there, and then over here, please.
Ravi, okay?
Ravi, are you okay? Stumbling like the economy, poor guy? Yeah, please.
Like the forecast or the economy itself?
Sir, thank you. Thank you for the lecture. My question is on the agricultural sector, wherein you mentioned that the production has not come down, whereas the prices have fallen. And you also talked about national agricultural market. In this scenario, I would like to submit that we don't have efficient spot markets, and it is not integrated.
Sir, could I have your statements end with a question mark in brief, please?
Yes, the question comes now.
Yeah.
How long it will take to integrate spot markets and to develop a very strong future markets in agricultural sector?
I have 2 quick questions. The first is, given the emphasis you had on real estate and agriculture, an underlying problem in all of those is the land administration that India has, and given 2/3 of all cases are linked to land, I didn't see that as a solution or something that you've thought about. Is that something that, in a crisis like this, we could operationalize? The second is slightly on a lighter note. A couple of years back, you were here for a lecture on literature and and economics, and I'd asked you a question on how much fiction you used as the chief economic advisor. How would you rate your successor in his use of fiction or the lack of it?
Okay, we're going to take one last question right next to you. Is that the gentleman there? Did you have a question? Yeah, we'll take one more and then we'll answer these three and then move to this side.
Sir, do you think the corporate tax, were you planning for the corporate tax reduction all these years? There was Make in India, there was all of that. Was that part of the framework or was it just a reaction? And because now that has been done, that's why the personal tax cannot be reduced? I mean, have they locked themselves up?
Have they locked themselves out? Mutually exclusive. Yeah, so
Yeah,
agriculture
okay.
first, yeah.
The whole proposal to create a common market was actually very much part of the early effort that Niti Aayog undertook, ENAM and things. I have not followed it very closely. I don't know what's happening now, but clearly, I think we haven't achieved what we set out to do. The government hasn't achieved. So
Just hold it a little closer.
Closer. It hasn't achieved what's going to do, what it needs to do, but so I think it's completely a work in progress. I don't know what the state is now. I've been away 18 months. But I think that, that is one amongst a number of things that need to be done on agriculture. Take the fact that, we have this is something that Vijay Kelkar and Ajay Shah also mentioned in their book, that we have kind of almost pro-cyclical trade policies. When prices go up, we have export restrictions. When prices go down, we have import tariffs. And what that does is that actually it unsettles the farmer because he has no certainty and therefore his long-run thing is going to be. So that's something that clearly needs to be addressed. See, the problem with I try to think about these things in much more long-term kind of political kind of frameworks, which is that why hasn't agricultural reform, which benefits millions and millions of farmers, why has it not been politically advantageous to do this? That's the question that keeps, popping in my mind. We thought, for example, late last, that the fact that agriculture wasn't doing so well did have an impact on some of the state elections, in December of last year. And this has been happening through Indian history, that, economic history, that agriculture doesn't do well. It affects a lot of people. And I think things, it does have political ramifications. My only explanation for this, or part explanation, is that, when the farmer is not doing well, it's probably not clear to assign blame to, this central government or this state government. If we could, and this is the same problem, by the way, in health and education, that over 60 years, why haven't we had, except for now the recent Delhi experiment, why haven't we had political parties staking political capital on improving health and education? Because after all, if there's so many, undernourished, undereducated children, it must be a political opportunity as well. And the same thing is with farmers. And yet that political dynamic hasn't worked out in India for reasons that I don't, kind of the politics of this has kind of evaded me for the long run. And so, we can, that's why I say we can keep saying what needs to be done, but unless the underlying politics comes out in the favor, in a way that it did for some other things, I don't know how that's going to happen.
So the second question was
land.
Land there, and the question was also on, if data is fiction, do you really need fiction?
So on land, see, remember on land, one of the first things the government tried to do, was actually undo the earlier land reform. And of course, we know what happened. The history went bad there. My plea on land would actually be something a little bit different. See, if you think about it conceptually in a country like India today, we have this surge in land prices and land values. We are we don't have fiscal resources for all kinds of other services that the government has to provide. And here's this asset that's appreciating in value, and we're not able to fiscalize this land value. So we are foregoing a huge opportunity. So even forget about, land reform, land whatever. If we can, just have land taxes, and remember, these are done by urban bodies, not even, state governments do a little bit, central government does virtually nothing at all. Why can't urban, we did a piece on Bangalore, by the way, Bengaluru, in our economic survey. Bangalore collects about 5 to 10% of its potential property value, potential collection of taxes in this. So then I ask myself, one of the most sophisticated, electorates here, why doesn't Bangalore, penalize and reward politicians depending upon whether they're able to fiscalize land values and to deliver services or not? It hasn't happened. So I think that is something that we need to do much more at state and urban body level. On the corporate tax, before I come to the fiction question, on the corporate tax, we did have very early discussions on the corporate tax. And as I said, a few months ago, the political atmosphere wasn't right. But then, now when, the economy was doing somewhat, was floundering, I think the government felt it had to respond. And to some extent, that combination of the fact of having to respond because circumstances were adverse, plus the fact that, the political constraints that prevailed early on about the whole Sood Budka Sarkar changed, and that allowed, I think, the corporate tax to go through. See, the corporate tax is something that's desirable. What had to happen was in any case desirable in the long run because structurally our taxes were too high. And that's why I think the fact that the timing was what it was shouldn't take away from the fact that from a structural point of view, it was a desirable move. The income tax structurally, I don't think there's anyone would say there's any big compelling reason to, change the income tax rate.
Sorry, the question was, are they mutually exclusive? Because you've done one and you have taken away 1,45,000 crores.
I mean, yeah, if you take, to the extent that fiscal resources are limited, it is going to play into that. There's no question about that. But then my question is that even if you think it's not a zero-sum game, you have to assess what are better ways of spending that money. On fiction, it's a cardinal rule of public life that you're only allowed to say things about your predecessors and successors when you praise them. And I don't know the fiction reading habits of my successor.
So I'll just add on the corporate tax that all India did was go from the fourth quartile of large countries to the first quartile of, or maybe median of large countries. So while it looks like a big move, and it was a big move in the context of India, it's not really a major move. And
no, but it's structurally in the right direction.
Absolutely. Yeah, and it's now probably adequate even. It's right moving from the bottom half to the top half. So I don't know where the mic is.
This is the mic.
Yeah, perfect. Yeah, go ahead, ma'am.
So 2 questions. One on the data part, which you said that the data is, I think, the most important. What would you say with regard to increasing the tax net on all of these fronts, right? Real estate, property tax, income tax, all of it. What can be done on the data and what is happening or what was being done while you were there? Number 2, I think the most worrying metric that has come out in this whole slowdown is rural consumption, right? I mean, that seems to be shrinking, and that means much more of a severe impact on the rural consumer, even a small change there. So despite you mentioned the cogent framework that existed in the first government, the JAM and all of that, what happened to rural consumption? What really happened there? And was it not demonetized? Was it something else?
I just asked one more question and then we'll...
Yeah, Dr. Subramanian, thank you very much. I was just wondering that when you were talking about the economy and its long-term prospects, the underlying assumption is that there'd be no disruption because of social tensions. As you know, in any economy, a social tension can actually be a huge reversal. 2 points that I would actually like your views on. One is that in your 2006 study that you did with Raghuram Rajan and Kalpana Kochar, You had identified the problem of 13 million people coming into the labor force in 2006, and that continues for the time. The other part is related to the agricultural sector, where in a generation, the average land holding will not be able to sustain a family. So you really do have a problem that in 25 years, you will have a huge rural to urban migration just because it won't be able to sustain. So the question which I want to pose to you is, in this framework, the way you look at it, if you looked at it a little longer term, are we still boxed into a real low growth scenario that can lead to a huge lot of disruption for social tension? Thank you.
I'm trying to transition out of my role as someone who worked for and spoke for the government to someone who doesn't, work for the government. So in terms of the data question, I think that, a certain awareness of, the problems with the data did exist when I was in government, and I think, especially on the GDP, which I focused on, there was an issue. See, and as I said about the GDP data initially, that initially it was purely a technical problem on the GDP data. There was no kind of real political whatever anything. So, and that somehow over time, maybe it changed. I think that we've had one of the world's best data systems, ever. Angus Deaton talks about how our, NSS surveys were the model for the world. I think we have to regain that, and I think, frankly, unless the government recognizes that that is, both important for restoring its credibility and trust, but also simply, to make good policy, we need the right data. So, for example, on consumption that you said, I had a piece today in the Business Standard where I have a slightly different view on consumption than the NSS does. I actually think, people shouldn't just think that I, criticize when the numbers are overstated. I do think that in this case, the numbers were understated, consumption, and I make a case for why that was the case. But I do think that...
this is the leaked NSS?
The leaked NSS report,
2017
yeah.
report,
The leaked
okay.
I think they're of course, no question that the data must be released, but I do think that, and you can check out whether you buy that or not. But I think that in the case of rural agriculture, and this kind of links to that question, I mean, the truth is that somewhere along the way, I think in this kind of giddiness we had with manufacturing and then services, I think we forgot the kind of original lesson of the development structural transformation that, all successful development transformations happens in the context of high and rising agricultural productivity. You look at the East Asians, you look at China, and somewhere along the way we kind of have lost that.
US originally too.
Yeah, and by the way, on the land holding question, I think you have to be a little bit careful here, because if you look at the data, obviously advanced countries today have very high land holdings, but China's land holdings, by the way, are comparable to India's. So it's not just a land holding problem, or it may not even be a land holding problem. I think there are a bunch of things I laid out there in terms of what we can do about agriculture, new technologies, drip, how do we encourage drip? See, remember, the agricultural challenge, and this is where I think what I call the late convergence stall, the headwind, is happening against the background of climate change. Climate change means less water, and therefore agricultural productivity is going to be stressed more. So I think that renewed urgency about boosting agricultural productivity in the context of shrinking resources is, I think, something that we need to come back to and put center stage in our development thinking.
So.
Yeah. Let me. So I just wrote a piece recently saying that Sri Lanka was going to be the next Argentina, in the sense that Argentina is kind of a metaphor for a basket macroeconomic case. repeated inflation, repeated currency, collapses, repeated, overspending, repeated overborrowing and repudiating debt. And I said in this piece that Sri Lanka was showing all those ominous signs because, and this is actually some of my own research and research by lots of, especially Albert Hirschman and others, which shows that all these macroeconomic pathologies have their origins in social divisions and lack of social cohesion. So I think it's kind of almost like motherhood and apple pie to say that, if you don't have social peace, the task of running an economy is going to be infinitely more complicated. It's just, it's a truism that, but perhaps it's worth restating again and again. Because, and it's not just you see, it happens in several ways, right? If you think about, macroeconomic pathologies is really about fights for sharing the cake. And you need a process of, politics, and democratic politics is really about, apart from whatever it does to politics, is a way of how do you share the burden sharing, whether when you're doing well or when you're doing badly, burden sharing is absolutely critical, and that the legitimacy of that burden sharing depends upon social peace and social harmony. So if you lose that, all kinds of bad economic consequences follow.
We're going to take three
Yes.
more questions, one there.
Yeah,
one
good
there.
evening, Dr. Subramanian. Thank you for a great talk. And I had two questions basically. One was, as I was listening to your talk, the overarching theme was I kept getting reminded of the famous paper by Doctors Kenneth Rogoff and Carmen Reinhardt, which basically talks about debt overhangs in economies create reduced growth.
Correct.
And my question to you is this what you were mentioning here, is it qualitatively different from what they had mentioned? Is that the case? And the second question is, we've been seeing a period of extraordinary, quantitative easing over the past 10 years or so in the case of USA, Japan, and the EU and European countries. There have been a lot of distortions or perceived distortions people have been talking about in terms of negative yielding bonds, low returns for savers of risk-free assets, as well as governments getting into market-making activities, And in the context of all of this, what I just wanted to ask was like, we're not in isolation here. So how is this affecting the Indian economy and all of this in terms of the linkages, Yeah.
Second question, last question here.
Dr. Arvind Subramanian, you talked about the criticality of power sector reforms. Now, Delhi government, don't you think they have done a commendable job of reforms in the distribution? So much so, Arvind Kejriwal is hoping to come back to power through what he has done largely on the power sector. I mean, you also mentioned about education and health. But power sector today, from the losses in the range of about 52%, it is less than about 8%, and the reliability is over 100%, is in the range of about 100%. Isn't that, and why is it not being replicated by other governments? I am just unable to figure out. Thank you.
Yeah.
Last question here.
Good evening, sir. Considering the overarching philosophy that India is a consumption-led economy, but
so again, this is where I want to, my co-author said, Arvind, don't go there. You're never going to win this battle because everyone thinks India is a consumption-led economy. No. So can I just say one thing on that? I've been thinking about why do we think we're a consumption-led economy, right? And let me try one last attempt to.
Because there's only government consumption, no government investment.
No. Let me try one last attempt at trying to convince you that. I think that because we did services and not manufacturing, people equate export and trade with manufacturing. And since we didn't do manufacturing, we therefore think we're not export-led and therefore consumption-led. as Nandan and others will testify here, even though we did services, it was an export-led services model. So, analytically, we had an export-led model. It's just that sectorally, it was not so much manufacturing, it was services. So that's why we keep, otherwise I can't explain why. And let me give you one last factoid, which I think everyone should really internalize. India trades more than any country of its size. So we're not a consumption-led economy. Sorry, I preempted your answer.
No, my question was basically considering that there is a need to change that philosophy in our mind that it is in fact an export-led economy and investment-led economy. Is there a need for policy intervention in terms of truly exemplifying that, saying, for example, a dirty flow trade of Japan model?
Should we make it an export investment economy?
Yeah, exactly. Like a Japan model,
what policy would we?
See, okay. Okay, is it one more?
Yeah, there were a couple more questions before that. So one was about the international context of quantitative.
Let me finish. Yeah. So on that, yes, Rogoff, Reinhardt is very much it's just that, I feel that India, because it has never had balance sheet crises of the sort Reinhardt and Rogoff mentioned, is why we're having difficulty understanding the current predicament. But yes, it's exactly a play out of Reinhardt, Rogoff. I think I thought you were going to ask the question of, see, the two potential questions that you asked. One, they're doing QE2, what's the impact on us? Or they're doing QE2, should we also do QE2? Because now people are speaking about that as well. And on the latter, I think the answer is comprehensively no. There's no need to get into all this, we're already injecting liquidity. And I think on the other side, I think we know what the consequences have been. They've had low interest rates, it's pushed capital to developing countries, but then, the capital comes in and goes out, it creates a lot of volatility, and so we need to do, measures to kind of address that volatility. On the power sector, you actually, threw me off because, if you look at the power sector data, at least the latest data I've looked at, if you saw the electricity generation chart, if you look at plant load factors, they're actually declining very rapidly. And I thought all the latest, which I haven't looked into and so I won't say too much, but the whole Uday scheme and the DISCOMs are now back to being in, their losses have increased, the sense that the ATC gains over and above what they did just because their debt cost was lower, that doesn't seem to have materialized in any significant way. So it's news to me that power sector is a success, given that I came with a prior...
Only in Delhi.
Only in Delhi. I don't know Delhi well enough. I don't know Delhi well enough, whether it's true or not.
I think he was asking, in Delhi it's been a success, why not replicate?
I don't even know that I didn't realize it was true in Delhi as well. I'm not sure. I don't know whether it was true in Delhi or not. Yeah?
Okay, I'm going to appropriately leave the last question to the center of the room, not to the right or the left.
Yeah. Mr. Subramanian, great talk, but I'd like to ask one very basic question. When you say there's a free fall in the economy, which it is, the free fall is in what? In the demand for all the goods which are being produced, whether it's automobiles, whether it is real estate, whether it's FMCG product, biscuits, etc. So obviously the companies are under great stress because their top lines are in a mess, holy mess. And that affects everything which is happening. So when you say that the demand is not the driving force, yeah, I do believe that in India, exports are a minuscule part, even though IT has given it a big fillip, yeah. Otherwise, as a percentage of GDP, it's small. It's really more the consumption, and all the industries are in a mess. They're feeling the pain. They're feeling the pain very, very badly.
So, I generally get pretty good teacher evaluations, but here I think I should get an F on all my teacher evaluations here.
Or a C, at least.
Or
C for consumer, yeah.
C. Firstly, I think that, it's not the case. Exports to GDP in India is not low. It's about, it's about 25%, 20 to 25%, which is quite high.
And trade is 40.
India's trade to GDP is greater than China's. It's greater than US. It's greater than Japan. It's greater than Brazil. All Indonesia, all the big countries, much traded. So that is, I think, the notion that we don't trade is just not right. And so the question, therefore, is a good one. And that's, I think, maybe what we need to, the mindset shift, maybe the one thing that comes out of this talk is that how do we get people to refocus on exports and investment? I think, and to me, it is self-evidently clear that unless you unbreak the logjam in the financial system and clear the debts of the companies, you will not break that investment cycle or the export cycle. The problem with exports is that you also need world demand to cooperate, and at this stage it's not cooperating. So that's why I say that we have to have some moderation in terms of what we can expect from our economy. I mean, the birthright of 8 to 10% that we achieved during the boom, I think it's another mindset that we have to, I think, really get out of, because it is not an entitlement.
So sorry, we'll have to take it offline, sir. So, sir, please. So he started with the argumentative Indian. We should finish with the argumentative Indian.
It's good. Thank you.
I think we're done. Thank you. The sun may not have risen on the Uday, but it has set on this conversation. So thank you very much for coming. And I think, Arvind, you'll be here for a little bit, or you're leaving immediately?
No, I'm leaving tomorrow evening. I'm leaving.
Oh, no, just right after this. Do you want to?
I don't know what the program is.
Okay. Yeah. You can stay for a few minutes outside, so anybody has a few remnant questions. Sorry? Yeah, there are books outside, so we'll be signing that as well. So thank you again.